Welcome to one more new masterclass where we will help all the digital wealth partners to partners with content which will help them to uh, 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 do a right thing for their client's portfolio. Okay, so most of you know me. Okay, because I used to take a lot of master classes before. Okay, so see, after yesterday's budget, you might have read many piece of notes. Okay, there are many people coming on news, coming on newspaper, explaining everything about budget. So I'll not go in detail of this budget like the way economists do. Okay, I'll be analyzing this budget with you all, the how the market is looking at this budget. Okay, what we can take out from this budget, which will help us to choose a right product for our clients when it comes to investment. So as we always say, we are into the long-term investment strategy. Okay, we are not here to double the money in next 1 month or 2 months. So all my points, whatever we are going to discuss, it will be a decisive point from the investment point of view. Okay, so that's what we are going to discuss today. So initial slides, when I say Union Budget 2021, initial slides I have kept the way we have received the Union Budget notes. Okay, what all they have done, what government has done, and in a later part I'll go through what is the significance of this budget when it comes to investment, what all the headwinds and tailwinds available, and what all opportunities you have when it comes to investment. Okay, so initially when you look at this budget, okay, see, this is the pie chart which is saying rupee earned and rupee spent. Okay, in this current year. Okay, so the largest revenue for government is coming from especially income tax source, corporate tax, and GST collection, which is around 15%. Okay, 13% and 14% respectively. So this is the major source of income for government. But one thing we have to note here is, look at the borrowing side. Okay, borrowing and other liabilities has increased to 36%, which is very alarming here. Okay, so government, we think that government's main revenue sources income tax and corporate tax and GST, indirect taxes, right? But this government's, the borrowing and liability, when you look at this has increased significantly, which is at 36%. Okay, and where this just a second, there are many people waiting in waiting room. Okay, so when we look at the rupee spent, okay, the larger portion is going into interest payouts. Okay, so that's why you have seen when borrowings have increased, the fiscal deficit also increased. Okay, and other larger spending where government is spending, the central schemes, central sector schemes like Manrega and all. Okay, Atmanirbhar Bharat, this is taking a larger chunk, and state share of taxes. Okay, after interest payout. So the main worrying thing in this is borrowing and liabilities and interest payout. But definitely, see, fiscal deficit is 9.2. If you remember, if you are in market, okay, you know that whenever market fiscal deficit used to hit at 4.5%, market used to tumble. Okay, but this time it is when it is hitting 9.2% fiscal deficit, market is not reacting anything. Why? When you look at the G20 nations, it's a call altogether taken by G20 nations where they are comfortable to increase the fiscal deficit to spend more. Okay, because if you look at last 2-3 years, the capital expenditure expansion is not happening. Even though loans are available at cheap rate, corporate world is not borrowing aggressively. Okay, so who has to spend? Government has to spend now to kickstart the economy, right? So that is why government is spending aggressively. That is why it is fiscal deficit is hitting 9.2%. And it is not only with the case of India, it's all G20 countries together. They have taken a call. Okay, it's all together, they are increasing their fiscal deficit and spending aggressively in the economy. Okay, so when you look at this graph, if you look at this, okay, it is in an increasing order, the spending of the government. So every time lion's share of the spending goes to the Ministry of Defense and Home Affairs. That is not a very big surprise. The point to note here is these are the three sectors. Okay, Ministry of Road and Transportation, okay, Ministry of Agriculture and Farm Welfare, and Ministry of Rural Development. So these departments have got a very good share. They have got the lion's share of spending. Okay, what it means, when you kickstart the road transportation, agriculture and rural development, the rural income, tier 2, tier 3 city income increases. There will be a lot of money flowing in these cities or these rural side. Okay, that will kickstart the rural demand. Okay, so that is one very important takeaway in this budget. The larger portion allocated to these departments, and you will see a demand coming from rural sector going forward. Okay, and where government is spending. So if you look at Manrega, last year they spent aggressively because after COVID issue, they have actually distributed money through Manrega schemes and all. Okay, so right now they have reduced it. But these are the main schemes where National Education Mission, National Health Mission, Jal Jeevan Mission, okay, metro projects. This central government is spending aggressively on these schemes. Okay, they have taken a lion's share when it comes to central schemes. So if you remember, Nirmala Sitharaman was talking about 6 pillars. Okay, in that 6 pillar, one of the pillar is health and wellness. Okay, so in health and wellness, what she is talking, she's saying PM Atmanirbhar Swachh Bharat Abhiyan. Okay, so what they are doing support for health and wellness centers, setting up integrated public health labs, establishing critical care hospital blocks. Okay, so they are spending aggressively modernizing the health infrastructure, and they are also working on COVID vaccination distribution. Okay, where they are going to spend around 35,000 crore. Okay, so when you look at the expenditure on health per as per percentage of GDP, this government has spent highest. Okay, which is at a 1.8%. Okay, budget estimation of total overall GDP on health sector alone. Okay, so that is what they are saying. And there was a nutrition program, okay, and Poshan Abhiyan, which was 2 different programs. Now they have merged it and made it a Mission Poshan 2.0, which is taking care of they are supplying very good quality food for children in a school. Okay, for what do you call pregnancy women, they are giving a lot of things. Okay, so they are doing certain things on a nutrition side. Okay, this is a part of health and wellness. So next pillar is human capital. If you look at human capital, see, Modi government is one government which is actually spending more money on upskilling the workers skills. Okay, so this is one government which is actually focused on improving the skills. Okay, on any front, you might see in higher levels. Okay, you might see in rural areas. Okay, they are actually providing a lot of skill development programs in rurals for rural people. Okay, they are setting standards. They have also they have made an announcement of Higher Education Commission of India. Okay, they are going to set up this. Okay, which will which will standardize the settings and accreditation, regulation, and funding of these schemes. Okay, they are about to set National Research Foundation, which is having outlay of in next 55 years. They will be infusing around 50,000 crore. National Language Translation Mission. Okay, Deep Ocean Mission for ocean exploration and biodiversity conservation. So they are spending more on these sides. Okay, to equip people with a required skills. They're spending more on human capital. So next pillar, what they said is infrastructure. So this is one budget in BJP government which has taken complete U-turn. Okay, why I say they have taken complete U-turn? If you look at last 4-5 budgets, okay, since 2014 onwards, okay, the infrastructure was not very priority sector for spending for Modi government. Okay, but this time they have completely reversed. They are spending aggressively on infrastructure. Why I say that? If you look at last budget and before that, they were mostly concentrated on a road construction. Okay, but this time what they are doing, they are focusing more on establishing rail plans, national rail plans. Okay, rail infrastructure. Okay, they are working more towards ports, shipping ways. Okay, using PPP model, and they are also concentrating on power generation. Okay, by setting up new transmission lines. Okay, hydrogen energy mission, which is already some of the countries like European Union, they are already working on these side hydrogen energy mission. So government is also working towards that one. So infrastructure wise, this is the first budget in BJP government after 2020 2014 where they have given significant importance to infrastructure. Before it was not at all there. Okay. So next is a inclusive growth. Okay, why they are saying inclusive growth? So it's like one other one for every citizen they have other, right? So similar to that one, they want to do a similar what you call they want to provide similar service for all the citizens irrespective of any states. That's why they are coming out with a one nation one ration card scheme. Okay, a portal to be launched for gig building and construction workers, social security benefits for these workers. Okay, gig and platform workers. So whatever plans they are coming out with, okay, they want to make sure that it is available for every sector of the every class of the community in the country. Okay, they are not focusing only on higher side, they are not focusing only on a lower side. They want to make it uniform, and they want to concentrate on inclusive growth. This is one funda which this government is working on. Okay, extending coverage of Swamitra scheme to all state and UTs, expansion of Operation Green scheme to include 22 perishable products. Okay, 1,000 more mandis to be integrated with ENAM. Okay, it's like a integrated markets where all the prices and all will be shown there. Okay, so these are the little things. Okay, but it takes a lot of what you call government's budget. Okay, these are how we say it's not so easy. Okay, they are spending on these infrastructures as well. Okay, and development of modern fishing harbors and fish landing centers. They're doing a lot of things to include this, to make a inclusive growth. Okay, and this is one more thing where minimum government maximum governance, this government truly working on this side. Okay, so if you look at before 2014 there was lot of income tax related litigations and all. So they are trying to reduce that. Okay, they are trying to GST is one best example where they have very minimum governance, minimum government and maximum governance. Okay, it is just whatever they have done with the GST, that is actually yielding fruits now. Okay, this is the first time in January we have crossed 1.2 lakh crore of GST collection, and you will see more yielding more yields from GST going forward. Okay, so right now what they are doing, whenever there is whenever we go for tax filing, now you see that whatever income we have earned, that is there in a pre-filled form. Going forward, all the short-term and long-term taxation coming out of all your security transaction, mutual fund transaction, that will be also pre-filled. Okay, now in a GST, everything, whatever sales you are showing, whatever filing you are doing month on month, that is also coming with all the details. So these are the minimum small things which look small things for us, but back end they have a lot of very huge infrastructure they have built in to handle these kind of transactions. Okay, so that is one funda where minimum government and maximum governance they are working on. Okay, So when you look at the one more thing is dividend payout uh, to REITs and REITs, which is called to be exempted from TDS. This is not exempted from tax, only TDS. There was TDS applicable when it comes to dividend payment and all. So that is not going to happen. Okay. Increase in limit of tax audit for a person who carry out 95% of the transaction digitally. So that is one very good news for people who are genuine business, who are doing genuine business. Okay. So eligibility for claiming tax holidays for startup proposed to be extended for 1 more year. Okay. So these all are small things which is actually making government intention, which is minimum government and maximum governance. Okay. So what is this budget from income tax point of view? You have to understand that, because whenever you get queries from your clients, it's all related to tax at the first instance. After that, they move to returns. Okay. So when we say from the taxation point of view, what is happening? Details of capital gain, dividend income, and interest income will be pre-filled in the return transaction going forward. Citizens of age 75 years and above, okay, who are living on a pension and interest income, no need to file the income tax. Okay. So affordable housing, additional interest deduction, which was proposed last year of 1.5 lakhs, will be extended for this year as well. Okay. Dividend will be exempted from TDS. So before TDS used to apply, right now this is not happening. Okay. Advanced tax liability on dividend income will be arise only after declaration of payment of dividend. Whenever you declare there is a dividend income, only then advanced tax liability will be applicable on you. Otherwise, it is not applicable. So they are trying to reduce the whatever issues investors were having when it comes to income tax returns and filings. Okay. Dividend for foreign investors, lower treaty rate benefit will be given. So see, all the NRIs, even though double taxation treaty they were having with some country, sometime they were not able to claim this taxation from other countries. Okay. So whatever lower treaty tax rate is there, okay, it will be taxed for them whenever it is a dividend income for foreign investors. Okay. Tax audit limit to be increased to 10 crore from 5 crore of those having less than 5% cash transaction. Okay, that's what we discussed in earlier slide. Okay, income tax appellate tribunal to become a faceless. So what is this? Whenever you have some litigations and all when it comes to taxation, okay, now that will also be a faceless. Okay, you don't know which officer is taking, officers don't know which party is sitting at other side on from which location. Okay, that they are working on. Okay. So relief of charitable trust running hospitals and education institution increased from 1 crore to 5 crore. So this was much needed demand from hospitals and education trust who are running schools and hospitals. Okay, that they have done. Okay, time limit for reopening assessment reduced to 3 years from earlier 6 years. So whenever you have dispute and all, okay, whenever they come to know about your taxation goalmals and all, up to 6 years they were having an option to reopen that and assess that. But right now they have reduced it to 3 years. Okay, before 3 years whatever you have done, they are not able to do anything of that one. Okay, tax holiday and capital gain exemption on investment for startups extended, and employee contribution not paid by employer will not be allowed as a deduction. So one more thing we missed in this was when it comes to ULIPs. Okay, ULIP and PF. Okay, before whatever income you used to generate from ULIPs and PF contribution, employee PF contribution, not employee PF contribution, that was tax exempted. But right now, what they have said, government has said, if your contribution is more than 2.5 lakh rupees per annum, okay, whatever income you are generating out of that product in ULIP and Provident Fund, PF fund, okay, when your contribution is more than 2.5 lakh rupees per annum, that will be taxed. Okay. So see, that's what I said. Initially, we will discuss about all the pillars and what is there in the budget. But how it is going to affect our investors, because we are trying to take care of our investors' money, right? We want to make sure the risk adjusted return is higher side for these investors. Okay. As a wealth managers, okay, what we are expecting, okay, what all headwinds and tailwinds for 2021. Okay. So some of the list points I have listed here. Okay. Re-rating of other emerging markets. If you look at 2020, China and India got the lion's share of FII inflows because they are self-sustaining economies. Whatever they produce in the economy, they are able to consume that one because of huge population and increasing income of these people. Okay, that is why you have seen all other major emerging economies like Philippines, Malaysia, Indonesia. Okay, they have seen the negative outflow of FII money in this 2021. Okay, 2020, sorry. So re-rating of these emerging markets, okay, will divert the FII money from these markets to markets like Philippines, uh, Indonesia, Malaysia, okay, these markets, other emerging markets, Asian countries, okay. So that is one very important news we have to keep note on, because anytime the re-rating might take place in this year, okay. After that, the new money, whatever FI money is there, okay, that will be diverted to these markets, okay. Change in MSCI index weightage. Okay, some of you, if you would have attended our masterclass session in the month of October and all, okay, we actually said that MSCI index has increased the weightage of India as a country, and due to which we are about to get around 50 to 55,000 crore of index money, passive money coming into Indian markets. What it means, MSCI is one index which is followed by all the major Europe and US pension funds. Okay, whenever we say pension funds, they are a passive investors. They go with the MSCI index. Okay, wherever they have allocation, they will allocate their portfolio in same manner. Whenever there is a change in MSCI index, if they increase the other emerging markets index weightage and reduce Indian weightage, that will have a significant impact on Indian markets, because that will divert the FII inflows, okay, to other markets. Higher domestic inflation and fiscal condition. So right now, see, as I explained you earlier, okay, right now fiscal deficit is at 9.2, and we are expecting 6.8 going forward next year, right? So this is one thing which is very important, because physical condition, if deteriorates, okay, more than what we are expecting, that will have a significant negative impact on a credit rating of India as a country, where we our government borrowings will be increased, rates will be increased, okay. That has a some negative effect on a bond market as well. So this is physical condition right now. Even though we are saying 6.8, it's in a comfortable zone, because it's a call altogether G20 nations have taken, and all the G20s will be facing this issue, okay. So that is one thing we have to keep a note on. And higher domestic inflation, it will be a problem, because right now we are not seeing any further rate cuts in economy due to higher inflation. If inflation would have been at a lower side, we might have seen another 25 basis point rate cuts, but that is not happening. If it keeps on increasing, there will be a chances of increasing the rate as well in future, 6 months down the line. But as of now, there is no impact for at least next 6 months. Effectiveness of vaccine and new COVID variants. Okay, why we are saying this? Effectiveness of vaccine in some of the countries where a vaccination drive is going on, people are coming out and saying the effectiveness of this vaccine is 20%, 30%, and all. That will have a significant impact, because what it says, the economy opening up is at the in the shadow level only. Okay, it might not open completely the way we were expecting, because vaccination effectiveness is at a lower side. A new variant, why I am saying this, if you would have read news, okay, people are talking about new South African COVID variant, right? What it is suggesting, this is expected to be much more deadlier than the COVID-19, and recently what we found in UK variant as well. It is much more stronger and resilient to vaccination, COVID-19 variant of South Africa. So as and when we get a stronger variants, okay, going forward, that will have an impact on markets. Right now it is under control because whatever vaccine we have found, it is in the purview of that vaccination. Okay, if there is a new variant which is not under vaccination preview, then it will be a major blow for markets across globe. Okay, right now we don't have that issue, but we don't know what will happen. Okay, a rupee depreciation. So whenever I say physical condition is deteriorating, that has a negative impact on rupee. So if you remember last 3 months, okay, we have seen ocean of FII money coming into Indian market. Whenever FII money is coming into Indian market, rupee tend to appreciate, rupee tend to strengthen, because FIIs are giving dollar and demanding rupee to invest in Indian market. But due to physical condition and fiscal deficit at a 9.2%, the rupee has not appreciated, even though we have seen one of the highest FII inflows in last 3 months. Okay, that is the main reason why rupee is not appreciating. Okay, so when rupee is depreciating, what happens? It is a positive for some sectors like export oriented, like IT companies and all. Okay, negative for some sector which is import oriented, oil and gas companies and all. Okay, so this is one very important factor we have to be looking closely in 2021. Okay, because even though after getting 1 lakh 1.23 lakh crore of new money into Indian economy by FIIs, the rupee has not appreciated. So whatever level we are at, 71, 72, 73, okay, this could be a new normal for rupee. This might not go back to the 62, 63 level how it was before. Okay, and global liquidity tightening. So this is going to be a global phenomena. So whenever all the governments together, they see there is a lot of liquidity available in the market, okay, they are about to increase they will start with the liquidity tightening. Okay, so that is one important thing. It will be a global phenomena, and definitely Indian markets, global markets, all emerging markets will react to this one. Okay, we don't know whether it will happen in 2021 or 2022, but definitely it will happen someday. Okay, not immediately, because everybody is focused on kickstarting the economies in their respective countries. Okay, so what is positive in this budget? Okay, which is actually positive for markets, okay, investments, and for your clients who are holding their investments. This is the one budget which is growth forecast focused approach. So if you look at the last 3-4 years, okay, the liquidity position was great in the economy. Okay, interest rates were going down. Companies like larger companies, listed companies, they were holding a lot of cash reserves, but they were not ready to spend on capital expenditure. What is capital expenditure? Setting up new business, new factory, increasing the capacity and all. Okay, that they were not doing. Okay, even though there was a abundant liquidity available with them. Okay, this budget has focused on kickstarting the growth in the economy by spending more towards capital expenditure. Okay, so that is one thing which makes this budget a growth focused, growth oriented, because in last 3-4 years Modi government has not done this. They were never concentrated about capital expenditure. They were just thinking that we have infused the liquidity, we have given the tax soap, companies, private sector will start the capital expenditure. But that is not going, that didn't happen. Now government is coming out and doing this capital expenditure. Okay, increased transparency and ease of doing business. As I told, whenever GST filing is there, okay, income tax filing is there, okay, they have increased lot of transparency in their filing systems, okay, and managing their account systems, government accounts, which basically a collection of tax and keeping track on companies activities, banking activities. Okay, they have increased transparency tremendously after 2014. Okay, so that is going to help definitely over the long period. People will not worry who are doing a genuine business. It is only worrying for some people who are evading these incomes and all. Okay, and ease of doing business. That's what they are focusing more on, doing business. Rest everything will be taken care by the systems, infrastructure, what they are setting up. Okay, consistent fiscal deficit implies higher government spending until FY26. So what government said yesterday, the fiscal deficit right now is at 9.2%, next year 6.8%, in next 5 years it will bring back to 4.5%. So in next 5 years it will minimum fiscal deficit will be near to 5%, will be there for next 5 years. So what it implies, government is spending aggressively on the economy. Okay, government is borrowing and spending in the economy. So you will see a lot of spending taking place when it comes to infrastructure, when it comes to other schemes. Okay, setting up uh, government units expansion. Okay, PSUs expansion. Okay, you will see a lot of things. Okay, when we say government is spending, deficit is going to be at 4.5 until next 5 years. Okay, disinvestment drive by government. So government, what they are doing, they are completely privatized. They are working on completely privatizing two government banks and one general insurance company. Okay, also they are reducing the stakes in some of the PSU companies as well, banks and CPSCs. Okay, so what it suggests, government is about to get money from this disinvestment drive, and again what they are doing, they are spending on infrastructure and capital expenditure side. Okay, as I told, infra and capital expenditure is one major focus area. Okay, where government is very much focused. Okay, boost for automobile parts manufacturers. So what government has done, they have increased the some of the automobile parts which companies used to import from other countries. Okay, they have increased import duty significantly on these parts. So what government is saying, you set up whatever resource you want, we will give that. Okay, you set up the unit and produce it here. Why you want to import that? We are capable of doing that. Okay, in India. So you do that one. So this will actually give a boost for small and medium scale enterprises. Okay, because they are the major players, automobile part suppliers. Okay, in this MSMEs. Okay, these are some positive points which is going to affect our investors investments. So what all funds you look for 2021? Okay, so I was just reading JP Morgan's research report for 2021. So what they said, last year it was in India at least. Okay, last year it was dominated by FII flows. Okay, FIIs were heavily bought Indian stocks in 2020, and 2021 not only FIIs, DIIs also participated, but FIIs bought aggressively. Okay, what they are saying, 2021 will be driven by mainly a retail investors. Okay, so when we say retail investors, most of the retail investors participate through mutual funds. Okay, so when money is coming through mutual funds, okay, SIPs and all. Okay, the lion's share of SIP right now, we have around near to 8,000 crore SIP book in the country. Okay, every month mutual funds altogether they get near to 8,000 crore SIP. Okay, so that amount, 65% of that amount is allocated to large caps and focus funds. So what it suggests, we were thinking large caps were fairly valued. Okay, but the money is available in the sideline, money is coming, and money is demanding large caps itself. Okay, blue chip companies itself. So we expect this large cap and focus funds, which is again a large cap, okay, doing very well in 2021. Okay, because they are getting lion's share of allocation, large caps and focus funds, which is around 65% of the SIP book. Okay, so we expect this to continue to do really well in 2021. Okay, consumption oriented fund. Why we are saying consumption oriented fund? As I discussed in a second slide, a lot of government allocation is going towards rural area, road construction, okay, agriculture side. So that will actually have a lot of demand. That will actually create a lot of demand in the rural and tier 2, tier 3 cities. Okay, so all this consumption oriented funds focused on these kind of consumption stories. Okay, there are some rural Sundaram is having rural consumption fund, ICICI is having a consumption fund. Okay, so these funds are expected to do really well. I'll come out with a separate note on recommendation of these different sectoral funds. Okay, but here as a sector, consumption story will play out really well. Okay, logistics and service related funds. Why I am saying this? Okay, when government is pushing at a capital expenditure side, infrastructure side, okay, the unorganized sector like transportation will get a lot of orders in this. Okay, so this will actually create a demand for stocks which are related to logistics, transportation and services. Okay, because unorganized sector, transportation, hotel business, all these comes into unorganized sectors. Okay, so we expect logistics and service related funds. There is one UTI logistic fund. Okay, we are actually evaluating that fund, okay, to include in our portfolio. So this is going to do really well. IT and tech funds. Why I am saying IT and tech funds? As I told, rupee, wherever it is right now, it is at the 73, 74 level. Okay, that is going to be a new normal. Okay, even though we have seen a huge FI inflows, the rupee has not appreciated due to uh, 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 fiscal deficit reaching at 9.2% level. Okay, whenever fiscal deficit reaches higher level, the country's currency tend to depreciate. Right now, whoever in the business of exporting the services, they will actually get a advantage of this rupee depreciation. Okay, and IT is the biggest export oriented segment in India at least. Okay, and IT companies tend to do really well in 2021 due to increased revenue through rupee depreciation. Okay, that is one theme to play out in 2021. And pharma funds, as I told, government is working towards one pillar which is called wealth, wellness and health. Okay, health and wellness. So lion's share of money is coming to this segment. When the lion's share of money is coming to this segment, companies who are in pharma segment, okay, they tend to do really well. Okay, when we say pharma fund, they will not hold only pharma companies. They will hold diagnosis companies, hospitals, okay, in their portfolio. Okay, it's a all combined portfolio when we say pharma funds. Okay, so these sector is expected to do really well. Okay, many of you might be wondering, when we are saying infrastructure is expected to do really well, government is spending more on infrastructure, why infrastructure fund is not there in this list? Okay, I have a reason for that. Okay, infrastructure is one segment where you need a heavy capital expenditure. Initially you invest for at least 5-6 years to complete that project. After that, your money inflow will start. Okay, and infrastructure is one segment where you can cook up your account books easily, because there are a lot of labors involved, unorganized payments involved. Okay, when it comes to pharma projects, not pharma, sorry, infra projects. Okay, so that is the main reason why we are avoiding this infra funds as of now, because they can easily cook up their account books. There is a large segment of workers working which are unorganized, and payment done to them is also unorganized. Okay, there are a lot of leakages available in these projects, infra projects. So we wanted to stay away from infra funds as of now. until unless we get a concrete clarity on these. If you look at infra funds in last 5 years, they have not done anything. Okay, they have not even beaten the debt returns. Okay, so right now, due to this very reason, we are staying away from infra funds. And when you look at the gold, okay, some people would be having a question around gold, because they have reduced the import duty from 12.5% to 7.5%, which is a 5% reduction in import duty. Okay, but this is not good for a gold investment. Okay, because in a international market, whenever we say gold funds, they are closely related to international market. Okay, and uh, right now gold price, it is still at a higher side. Okay, so we don't want to touch and get into some asset class which is super expensive at this point of time, and clients will get stuck for a very long period of time. Okay, we don't want to touch that one, but definitely it's a good move to buy golds for your consumption. Okay, you will see a lot of this coming into gold price, whatever reduction they have done in import duty. Okay, so slowly that will come to gold price. Okay, but it's a good for consumption, not for investment. So that is one more point I just wanted to highlight. So that's all from my side. If you have any queries or questions, I'm open to take that.
Okay, Prasad, I think we have already, a few people have already asked their questions. So
Yeah,
I will, okay, start with the earliest one. Okay, so Milan had two questions. One, what is the fiscal deficit for other G20 countries? That's question number one. And he also wanted a clarification on the loan point that you had made.
just a second. G20 countries fiscal deficit. Right now, I don't have G20 countries fiscal deficit numbers, because we
Okay.
have come up with a budget yesterday. We have those numbers. Okay, but G20's number we don't have. But what we know is it's a call taken together by G20s to
Okay.
increase the government spending.
Okay. Can you clarify the point about the loan point that you had made on loan?
Explain that loan point. So what is that point? I am not sure.
Milind, can you unmute yourself and ask?
What is the loan point? Milind? Okay, I'll address once Milind is online, because I'm not sure about that point.
Okay, okay, sure. So we'll move on to the other questions.
Yeah,
Okay, so Priya asks, GSEC yield has gone up in the last few days. Why is that?
no, that's what I said.
Milind?
Whenever there is a lot of physical deficit in the economy, okay, what it shows, government is borrowing heavily. Okay, that is why the government borrowing will also increase, but it has not increased the way it's supposed to increase, because it's a common phenomena across globe now. Okay, right now, all the governments are borrowing heavily and spending on their respective economy. So that has gone up due to, it's a knee-jerk reaction, what you call. Okay, but it will come back to the normal level.
Okay,
It's not a very big deal.
okay, got it. Milind's doubt was
Yeah,
about
once again, can
duplication
I
of.
just, yeah, Shrini, can I just add on
Yeah,
to
yeah,
the
please,
question?
yes, continue,
Yeah,
Mr.
yeah, yeah,
Yeah,
Priya.
so would you say this would be a good time to put in debt funds?
Debt funds, see, right now, equity should be the asset class for your clients. You should have a very good allocation. I'm not saying 100%. What I'm saying is, based on your client's risk appetite, they should have a equity allocation at a higher side. Because as I told, for next 5 years, government is saying fiscal deficit will be at a higher side. What it means, government is borrowing aggressively and spending on economy. They are kickstarting infrastructure and capital expenditure. When government starts with capital expenditure, okay, it's just the beginning of something very big. Okay, after that, all the companies, listed companies, will follow the suit. Okay, so what we expect, the equity asset class is to be the place where your clients majority of the investment should be based on their risk appetite. Debt is definitely, it's a good asset class. You should have always have a debt allocation in your portfolio. But what kind of debt you are choosing, that depends. Okay, if you are going to invest in GSEC at this level, okay, when interest rates are at the lower side, that will be a very risky bet, because after 1 year, if interest rate starts moving up, okay, the long-term duration bonds and government long-term bonds will be the first asset class in debt which will take a major hit. Okay, so if you want, you can consider short-term debt, okay, ultra short-term debt funds, and dynamic bond fund is also a good theme to play, because they increase and decrease the long-term duration bonds and short-term duration bonds based on the condition. It is dynamically managed based on the economic condition.
Would our debt basket be a good, or do we have another recommendation?
Yes, it's a good one. Okay. Right now, it holds really good.
Okay.
Current situation.
Okay.
Because we have not included any long-term debt in that one. It's a medium duration, short-term, and dynamic bond fund.
Okay, thank you.
Yeah.
Prasad, Milin's doubt was about the extension of 1.5 lakhs tax deduction on affordable housing. So could you please, elaborate on that? I think I got that right, Milind, correct?
Yes.
Yeah,
okay, yeah.
Milind, if you remember last year, okay, you usually get a 1.5 lakh rupees ATC, under ATC and all, deduction for your housing loans, okay, interest payout and all, okay. But what last year Nirmala Sitharaman announced, if you are buying a house which is a affordable house, when they say affordable house, it has a limit worth of 45 lakh rupees, okay. So if you are buying something that, okay, additional 1.5 lakh rupees deduction will be allowed. Okay, that is announced last year. That will continue for this year as well. They announced it for only 1 year, but this year they have extended that for 1 more year. Okay. You can actually claim 3 lakh rupees now.
Oh, okay. Thanks.
Okay, we have a question.
But you have to understand.
Sorry, we are just going through the questions very quickly. So what is new and gratuity in your opinion? That's a question from Shailendra.
Okay, to be frank, I don't have idea about gratuity. I'll come back on this one. Okay, I'll just
okay.
Okay,
we have a very good question from Srikanth. What is the impact on ULIP and PF maturity? Government has taxed higher contributions to both of those. So can you please explain that?
Yes. Yeah. So before that, Shailendra's question, gratuity. So I have read that document. Okay, gratuity is not included. Okay, only ULIP, which is insurance which are holding a units, they have included that one. Okay, gratuity. Right now, they have not announced anything on gratuity side, but definitely I'll confirm this. Okay. So Srikanth's question, taxation on ULIP and PF maturity. So yes. See, Srikanth, right now, okay, what used to happen, whatever you make investment in ULIP and PF, employee PF contribution, okay, you can opt for higher PF contribution, and whatever return it used to generate, okay, that was tax free. If you are investing 10 lakh rupees in a ULIP for a year, and it has generated around 50% in next 1 year, whatever 5 lakh rupees you earned above 10 lakh rupees, that was tax exempted. But right now, what government has done, okay, for PF and ULIP, if your contribution is more than 2.5 lakh rupees per annum, 2.5 lakh rupees per annum, okay, that will be taxed as per equity for ULIPs. Okay, so that is what they said. Okay, before it was not having any limit for investment. You can invest any amount, and returns generating coming out of these PF and ULIP, that was completely exempted. But now, if your contribution per annum is more than 2.5 lakh rupees, that will be taxed as per the respective slab.
Okay, here I would like to add that, when we say PF, it refers to all three PFs, voluntary provident fund, employee provident fund, and public provident fund. So I think, and Prasad may correct me here, but anything about 2.5 lakhs in all these three categories will be taxed per year.
Yeah.
Okay.
It's only employee contribution, not
Okay, yeah.
employer.
Correct. Only employee contribution. Okay.
Yeah.
Let's move on to okay. We have a question from Akshat. Why do you think there will be a global tightening of liquidity?
Sorry.
Why will there be a global tightening in liquidity?
So right now, if you look at, there is a huge liquidity available in the markets, not only in India, globally. Okay. All
Okay.
the US, they have increased the balance sheet, okay, by almost 2.5 trillion dollars. Okay. So that much new money is coming into the market. So they have done this, they have printed new money in the form of backed asset and mortgaged backed assets. Okay. But right now they are supporting these slowdowns in the country. Okay, they are addressing, they are distributing money, cheap money available to the companies, people in the form of loans and all. Okay, but eventually once everything stabilizes, everything picks up, okay, they have to reduce the liquidity in the economy. Okay, how they are going to reduce? Whatever loan they have given, they will call back. Whatever bond they have issued, they will start buying back, okay, from the economy. Okay, so global liquidity will, it's not an immediate threat, but we might see something coming out in 2021 by end of that year, this year. Okay, right now it's not an issue because globally economies are not doing well, but when economies are back on track, okay, all the emerging markets GDP growth has become like 8, 9, 10, 11%. Okay, US is also growing at 5, 6%. Okay, then you will see a tightening of the liquidity. When tightening of the liquidity happens, the whatever money flowed from all this emerging major economies like US and European countries, that will go back to these countries. Okay, how they go back? They sell it and pay back that. Okay, so that's what is the answer to liquidity tightening.
Okay, Prasad, we have again, two questions related to the, taxation on PF. So again, one, Milind is asking whether there are still good instruments to invest money, and a question by Rajeshwar around whether, like he would like a clarification on how much money, whether like PF limit was for 1.5 lakh only earlier. What is this 2.5 lakh about? So can you quickly explain those 2 points?
Yeah, see, PF contribution 1.5 is under 80C, but voluntarily you can invest more. Okay, you can invest 5 lakh, you can invest 10 lakhs. Okay, but whatever 10 lakh rupees, see, in 10 lakh rupees, 1.5 is a 80C investment limit that will not be taxed. Remaining 8.5, it's a taxed amount you will invest, right? But return coming out of these investment was not taxed before. Right now it is taxed if your contribution is more than 2.5 lakh rupees. Okay, so what PF limit was 1.5 lakh rupees, Rajeshwar is saying it was a 80C limit. Okay, this is not the 80C limit, this is for investment 1.5 lakh rupees. Okay, right now about 2.5 lakh rupees, whatever return you generate after investment, that is taxed. Before it was not. Okay.
Okay, so do you think all these, whether it is EPF, EPF, or PPF, do you think they are still good instruments to invest? And that is Milin's question. Can you quickly answer that?
ULIP is the best asset class to invest instead of PF and PPF and all. Okay, why? Right now we are at the lower side of interest rate. If you look at 10, 15 years back, how much they used to pay interest? 9.75, 10, 11%. Right now, this yield, whatever is there, it is about to go down. Okay, as country grows, okay, your all the debt investment yield will also come down. Okay, what is the interest rate in US right now? It is 0.25%, right? If not now, after 30 years, 40 years, we will also go towards that only. Okay, so when you are doing PPF and PF investment, you look for 20, 30 years, right? So when you are looking that way, your asset class should be oriented towards equities. Okay, so to take that bet, ULIP is the best asset class, trust me. Okay, you can make investment into that instead of going with a PF or PPF.
Okay, we have another question. So you are saying that government is spending heavily on infrastructure, then why will pharma and IT funds do well? So that is one question. I think there is also a part, and he has also written that we also see there is sharp shifting of funds from IT and pharma stocks to banking and infrastructure. So a quick comment on that.
No, I don't see sharp shifting from ITA and pharma to infra and what do you call finance stocks. So we have not got that analysis yet. Okay, to be frank. But why I am saying infra, I am saying avoid infra due to their ability to cook up the account books. It is large section of the what do you call labors. They are unorganized. Okay, payment made towards them, it's unorganized. Okay, there is lot of leakages take place when it comes to money flow. Okay, in infra projects. So I say stay away from infra as of now. Okay, why you should buy IT companies? Rupee depreciation is going to add fuel to their incomes. Okay, simply doing nothing, they will get a more revenue due to rupee depreciation. That is one
Okay.
thing for infra. And for pharma, since government is focusing more on vaccination drive, okay, and wellness of the people, okay, healthcare section upgradation. So these companies which are there in the pharma fund, that is expected to do really well. When we say pharma fund, it's not only pharma companies which are producing tablets and all. It's a combination of this sector, which includes hospitals, diagnostic companies, pharma companies. Okay, so we expect lion share of this amount will be coming to these players. That's why you should, the pharma still holds good for
Okay.
2021.
We have a few questions from Deepika. So one, what do you think of booking profits from multi-cap equity funds? Then do you think global funds will be a good bet? And finally, do you think investments in gilt fund and making cap stop to equity fund will be a good bet? So sorry, capital STP. Sorry. So yeah. So
Okay, so I lost all three
okay,
questions. Can you repeat one
if she has
first one?
given three questions, can you just read it out and answer
Where is that?
in the chat box?
Okay, chat box. Okay, what do you think of book profit from multi-cap equity funds? No, booking profit was a option available before budget. That's why we were actually sent out. We have actually discussed with our wealth managers also, and many people would have explained you. Okay, the profit booking time has gone now. Okay, people will run for taking position into the market. It's like they have missed the bus, they want to take that bus at whatever valuation comes. So we expect one more surge of FIIs coming into Indian markets, and one more surge of DIIs buying taking place in next 2 to 3 months. So profit booking would not suggest at these levels. Okay, if you would have done before budget, that would be a wise decision. We have actually done for our clients, and we are actually deploying back that money into equities now. Right now, at this point of time, we are not suggesting profit booking. And second one is global funds will be a good bet. No, it's a tricky question actually, because globally these stocks are actually running up quite a bit. And if you look at the indexes, like when you look at 2020 performance, all the okay, let's take Nasdaq. Nasdaq is mainly dominated by tech companies. That index is up by 43%, whereas S&P 500 is up by only 7%. There is a Russell's 1000, which is a combination of large and mid cap, which consists all other sectors. Okay, that is up by only 5.5%. So what it suggests, even though in US and global equities, there are certain section of the companies which have rallied. Okay, but you have a larger opportunity when it comes to other sections. Okay, like S&P 500, which represents all the category, all the sectors in US. For example, Russell's 1000, which is representing all the segments in US. Apart from that, apart from large cap, it has a mid cap stocks as well, good quality mid cap stocks as well. So you have a larger opportunities in S&P 500 and Russell's 1000, not on not in Nasdaq. Okay. Focused answers, global funds, investment in gilt fund and making capital STP to equity funds will be a good. No, see, investing in gilt fund and making STP, it's not a good idea, because STP, if you go for next 1 year, if interest rate goes in between higher side, okay, your debt investment will go in go for toss. Okay, it might yield a negative return for you if you are holding gilt fund, which is having a longer duration. So my point is, go with a short term or ultra short term funds or low duration fund and initiate the equity buy instead of going with a gilt fund. What alternative PF investment we can suggest to investor? ULIP. Okay, for PF investment, it's ULIP. Okay. Yeah. So does Wealthy suggest option for ULIP? Which one to buy? Yeah. Yeah, Milind, we have ULIP in our basket. Okay. So the community manager who are in touch with you, they will be able to assist you on this. If requires, we can take a separate call on this, how beneficiary this ULIP product is. Okay. So Manisha, hello, this is 2.5 lakh. You say is of returns? No, it's not return. It's an investment amount per annum. Okay, but can be long term, short term? No, based on that one. If you are withdrawing within short term, the equity short term taxation will apply. Okay, if you are withdrawing in long term, equity long term taxation will apply if you are into ULIP. Okay, MSCI index, Morgan Stanley index. This is okay. So MSCI is nothing but Morgan Stanley index. They have emerging Morgan Stanley index, a global Morgan Stanley index. Okay, whenever Morgan Stanley index is rejigged, okay, and increase some countries' weightage, the passive fund, all the pension fund, who right now you might know that there is a ETF, Nifty ETF. What is Nifty ETF? However Nifty is formed, they will invest in that fund. It's a passive fund. They will not use their brain. They will not use fundamental analysis on these stocks. They just go with a Nifty. Whatever constitution is there, Nifty weightage as per how many companies are there, they invest in that one. So MSCI is similar for global scale. Okay, and this is followed by many pension funds. So whatever MSCI index is doing in their index, they will follow that one. Okay, if increase Indian weightage, they flow more money to India. If they decrease Indian weightage, they take out money from India and deploy wherever weightage is increased. Okay. One last question regarding home loan. Do you perceive that rates will go higher now onwards after? No, I'm not sure about this. Okay, home loan rates and all, we don't know. Right now, rates are not going up anywhere, at least for next 6 months. After that, I'm not sure what will happen. Okay.
Okay, I guess we have already exceeded the time limit for this meeting. So I think we'll have to call it an end to this meeting.
Yeah.
Thanks to everyone who stayed back and asked all the questions, and thanks to Prasad for being so informative and patiently answering all the questions.
Yeah.
Thank you, everyone. We will see you.
Thank you, everyone. Let us know if you have any doubts. We are happy to address that. Okay. Thank you very much.